But the one thing I would just point out here, which is kind of something that I've been kind of playing around with, is that if you look at the equal weight, it actually is very closely following Bitcoin.
I
And I
have it
wanted to share my
right there.
screen really
Oh,
quickly.
so I had the S&P equal weighted, which was
Yeah.
thing for today, but yeah.
So we know Bitcoin made a high back in March, right? And that was its all-time high. And that's the same point where the equal weight S&P made a high. Then you had this secondary high over here, which mirrored Bitcoin. And then kind of the only difference is that Bitcoin's kind of rolled over. The equal weight's actually catching a bid now. But I just thought that was kind of interesting to notice that it's almost like Bitcoin's not in the group of the mega caps. It's not the sexy mega caps like Nvidia, but it still seems to be a little bit following the equal weight.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Gareth Soloway, McGlone, and Scott Melker are three trading legends with a combined wealth of knowledge spanning over half a century in the world of trading.
But it's a psychology. I remember it very clearly in 2008. Once the stock market going down, and I lived in Fairfield, Connecticut, a wealthy area, and the spending just shut off instantly. And once people don't see their statement, see it's giving back 20%, it's not going up right away. Even their house that doubled in the last 10 years is trickling down, and it shuts on everything. And we're just overdue for a normal cycle. Maybe it's starting soon. I think it's going to be starting this year. Maybe Trump will save us, but the market's priced for so much optimism. I'm just pointing out the potential for a little bit of normalization. And maybe that starts today. I don't know. Today's just a normal little backup. But I think Bitcoin was the best leading indicator after the great financial crisis. I think it's perfect to show us where we're going to be heading in the next few years.
And Bitcoin, let's be fair, Bitcoin was a great indicator of the top in 2021 in the stock market. I think it topped about 6 weeks
Right there.
prior to the stock market. So it's
Yeah.
just something to keep an eye on there.
A simple measure of Bitcoin versus a 100-week moving average breaking down. You see the S&P 500 versus a 100-week moving average. It's just really expensive. Most rational traders don't buy there. They just look for spots you ride it for a little while. You look for put strategies. Also a key thing I want to show you about Bitcoin. Again, this is the key thing I've been pointing out for a while. It's that divergent weakness. Bitcoin versus gold. It's been breaking down when it should be breaking out higher. And this is overlaid with the S&P 500 E-minis. 2 gaps below the market. Since 1997 on a weekly chart, we've never left one gap. Key thing that really struck me in 2007, I focus on this a lot, and this is just look at volatility. S&P, the VIX volatility index versus T-bills, a 52-week moving average. It's very low, potentially bottomed again. Bitcoin versus S&P 500 is breaking down, and on a pure technical basis, it's about 10 right now. There's no reason to get back to 7. It doesn't mean anything in the big picture. But I want to tilt over to something I think that's really significant I published today. Economic surprise index in the country is tilting over the way I think it really should. It went too far the other way. Now we're seeing all the signs of that overdue recession just starting to kick in. It's at the lowest in about 10 years. Now I overlay this with gold versus the S&P 500. Gold is just so cheap versus that S&P 500. Just a little pop-up should do that, and it should happen. I think it's just a matter of time. That's what I'm showing here. But I want to show you a few others, and I'll lay low and see your response.
The United States Consumer Price Index, CPI, rose by 3% year over year in June, slightly below the market consensus of 3.1%. Analysts claim that the CPI release was bullish for Bitcoin, but traders are questioning why its price remains below $58,000. 3 factors could possibly explain investors' lack of enthusiasm. According to trader, YouTuber, and analyst Don Crypto, Bitcoin's weakness can be attributed to scalpers and market makers trying to liquidate leveraged longs. However, the trend favors continuation higher, meaning BTC should bounce back to $60,000 in the near term. Essentially, if the U.S. central bank cuts interest rates, incentives for fixed income investments are reduced, and some of this money will seek higher returns elsewhere. According to the CME Group's FedWatch tracker of interest rate futures contracts, traders are now pricing 47% odds of 2 interest rate cuts in 2024, up from 24% the prior week. Furthermore, Yahoo Finance stated the Fed Chair Jerome Powell is paying closer attention to the employment rate, adding that the central bank is increasingly aware of the risks posed by a cooling labor market. Despite data pointing to higher odds of rate cuts, with consensus surpassing 90% odds of at least one 0.25% rate cut by September, Bitcoin's price remains pegged below $60,000. Meanwhile, the S&P 500 stock market index is 0.5% below its all-time high, and gold, the market's preferred store of value, is trading 1.2% below its $2,450 record high from May 2024. Even the Russell 2000 Small Cap Index, which excludes the 1,000 largest U.S.-listed companies, rose 3% on July 11. Given the constructive view of traditional finance, investors struggle to find explanations for Bitcoin's lack of bullishness. This decoupling is especially worrisome given that spot Bitcoin exchange-traded funds, ETF, captured $800 million in inflows over the past 4 trading days, as per Farsight Investors data. To make things worse, the U.S. dollar index, which measures the U.S. dollar against a basket of foreign currencies, declined to its lowest level in 5 weeks at 104.4. This suggests investors are not seeking shelter in cash positions, which could partially explain Bitcoin's bearishness.
So Ethereum, I've been watching CNBC in the morning, getting ready for work, and basically I'm seeing these Bitwise commercials for the ETF nonstop for Ethereum. And do you have any information on that? And do you think like we could see a run-up because of that, or is it more of a wild card?
I think we saw the run-up when they were surprisingly approved. We added, 30%, I think, to Bitcoin to Ethereum in a matter of 2 days. I had Eric Balchunas and James Seyfert on my show yesterday, the 2 ETF analysts from Bloomberg, specifically talk Ethereum ETF. They think July 18th, their best guess for them to start trading. So that's a week from today, but they also thought that there was a likely chance they would have launched a week ago. So they say take it with a grain of salt. We don't really know what the SEC is doing here, but they are coming. Listen, it's going to largely depend on what Grayscale does with their fees on the Ethereum trust, right? We saw that there were a number of reasons why people were selling GBTC after the approval, right? You had the people that were playing the discount trade, you had the people that had been locked and just wanted to get out, and you had people who were seeking a lower fee than 1.5%. If Grayscale comes in at 1.5% again and everybody else is at 19 bips, we're going to see a massive sell-off of the 8 to 9 billion in AUM of Ethereum, and we're going to get that sell the news. But once again, it's a fundamental, like you can watch those coins being sold. That's the transparency of this market. But if they come in with a competitive rate, and I think they're going to launch those Ethereum minis, maybe we don't get the massive sell-off from selling pressure. But listen, 8, 9, 10 billion, depending on the price in ETH, that's a lot of Ethereum relative to the market size, even more so than the 25 billion that was in GBTC was to the total size of Bitcoin.
Bitcoin's underperformance can be attributed to 3 factors. The first is the FUD, fear, uncertainty, and doubt, stemming from the ongoing sale by the German government. Nearly 50,000 BTC, originally seized from a pirated movie website in 2013, are being disposed of by authorities, either being sent to exchanges or known market makers. According to Arkham Intelligence, there are now fewer than 5,000 BTC left for sale. Another source of uncertainty comes from Bitcoin miners. The 50% cut in block subsidies from April's halving is forcing some miners to sell their holdings. According to a CryptoQuant report, large-size miners have sold about $300 million since June 20, while mid-size miners have unloaded around $500 million on a cost basis. Lastly, traders fear that the weakness in real estate markets, especially in China, will deter global economic growth. If corporate earnings disappoint in the second half of 2024, investors will likely seek protection in cash positions, which is detrimental for risk-on assets, including Bitcoin. These combined factors explain why Bitcoin has failed to reclaim the $60,000 support level, despite a favorable macroeconomic environment. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.